Hey guys, what's up? My name is Ayush Khanna and you are watching our channel Ayush Khanna Classes. Now, in this very lecture, I will be discussing the RTP of CA IPCC old course for May 2019 exams. This RTP is for Group 1 accounts. Group 1 accounts. Okay, now let's start. See, starting with the very first question. It's a direct question. I hope this question you can solve easily. Okay, very straightforward question it was. Question number one, both parts. Okay, then cash flow statement. Very easy question you can solve by yourself. A profit or loss prior to incorporation. Uh, this question also easy. I hope you can solve. Question number four. In the first part of uh, in the first video of RTP, I have discussed this question. You can watch there. If if you want the question number 5 solution, then you shall comment under the video question 5 and question 6 videos. Okay, in this video my main purpose is for the partnership question. My main purpose is for partnership question. Okay, question number 15. Ajay, Vijay, Sanjay are partners sharing profit and loss in the ratio of 2 is to 3 is to 1. The balance sheet of the firm as on 31st March 2018 was as follows. Okay, we are with AVNS Partners, capital accounts. Uh, they say that Kamal is admitted as a new partner with effect from 1st April 2018 by receiving one fourth of the share in the profit and loss account. By receiving one fourth share, okay, the remain the same as before. It was agreed that Kamal would bring some private furniture worth rupees 3,000 and private stock rupees 5,000 and balance in cash towards its capital. Okay, that means he is bringing his capital in the form of any kind and in the form of cash. Okay, rest points are easy. Only the first point is to be understood properly. Let's see. Goodwill of the firm is to be valued at 2 years purchase of the average profits of the last 3 years. Okay, the profits for the last 3 years were 35,900, 38,200, and 31,500. Okay. However, on checking the past records, uh, it was noticed that on 1st April 2014, of a new furniture costing 8,000 was purchased but wrongly debited to revenue account. But wrongly debited to revenue and also in the year 2015-16, a purchase invoice of rupees 4,000 has been omitted in the book. Okay, what it means? The furniture have been debited to revenue account. Furniture have been debited to revenue account. That means it was a decrease in the revenue, so we'll increase it. So we'll increase it. Okay. Next thing. Next thing. Next point. The charge depreciation of rupees 4,000 was omitted in the book. The firm has charged furniture of rupees on at the rate of 10% on original cost. Put on the okay. It was agreed that the existing partners between this interest in the goodwill was only to 4,000 rupees. Okay. See. What we'll do? Firstly, calculation of, this is the first working note. Calculation of goodwill. Year 1, year 2 and year 3. Profits, we are given with 35,900. I hope the question, you are having the question with you. 38,200 and 31,500. Less purchase omitted. Purchase invoice omitted. Purchase invoice omitted. Rupees 4,000 from here. Less depreciation. Now, how much will be the depreciation in this case? Let's see. Yeah, furniture 8,000. Okay, 8,000 into 10% on the original cost. Okay, that means 800, 800 and 800 total. That will be 29,900, 29,100. No, sorry, it will be 31,100. Okay, sorry, 31,100. 38,200 minus 800. So it will be 37,400. 31,500 minus 800. 30,700 would be here. So these are adjusted profit or correct profit. Now, average profits for 3 years. Average profits for 3 years would be 31,100 plus 37,400 plus 30,700 divided by 3 plus 37,400 plus 30,700 divided by 3. It would be 33,067 rupees. Goodwill. Two years purchase. Take to 2. It would be 66,134. 66,134 rupees would be the total goodwill. Okay. Now, out of this, 24,000 rupees good. Sorry, not 24,000. 42,000 goodwill. is to be distributed the among the existing partners, that is A, V, and S. A, V, and S. Now, in which ratio? In the sacrificing ratio. In case the new ratio and the old ratio remains the same, the sacrificing or gaining ratio will remain the same. Okay, 2 is to 3 is to 1. We have to distribute it. We have to distribute first 42,000 in this, and balance balance of 24,134 between A, V, and S. Okay. So not S, it's K. A, V, and K in the ratio of in the new in the new profit sharing ratio. Okay, in the new profit sharing ratio. I hope till here you got it. Now you can in this you have to write the journal entries in the working note itself for the bringing of the capital and goodwill and proportion of goodwill. You have to write the journal entry here. Let me explain further points so that you can solve. The main point is finished here. Okay. Motor car is taken over by Vijay at rupees 70,000. Okay. uh, by Vijay at rupees 70,000. What motor car? See the value of motor car. Motor car was of 60,000. 60,000. That means that it have been overvalued. It gave us the profit of rupees 10,000. So in revaluation account, when you will make the revaluation account, revaluation account by motor car, 10,000. Office equipment revalued at 25,000 at 25,000. Office equipment, 5,000 profit here. Office equipment. Whenever there is profit, it will get credit. It will be credited. Okay. 2. Expenses incurred but not paid of rupees 65,000 are provided for. That means expenses have been incurred but not paid of 6,500 was to be provided for. That is 6,500 we have to provide it for. Hello. ठीक है. Sorry, there was a phone call. Yeah. Expenses 6,500 done. Next thing, the value of stock is to be reduced by 5%. The stock value of stock is to be reduced by 5%. Stock is 40,000, so it's 5% to stock 2,000. So done. We are done with all the points. Yeah, it is a profit here. To profit 2,500 among the old partners in the ratio of 2 is to 3 is to 1, I suppose the ratio. 2 is to 3 is to 1 to profit. Done. Yeah, I hope you can now prepare the balance sheet and partners capital account. Okay. The reserve is to be distributed. Furniture is to be distributed among the old partners. Goodwill is to be distributed, and so everything is to be distributed at the time and at before the admission and after the admission. Okay. If you have any doubt in the question, you can just comment under the video. I'll reply. And if you feel like if you are facing problem in any of the uh, question of RTP, whether you are in old course or new course, you just put up a comment under the video so that I can get to know and upload the video for the same. Okay. Now start revising your the course has only 3 to 4 days are left for the accounts paper. Okay. Please don't do any other subject right now. Focus only on accounts. Focus only on accounts. As the paper in November 18 was somewhat, you can say, difficult, somewhat difficult. If you have not solved practice manual, study material, if you have not solved at least these two books, if you have not solved actually at least in these two books, you will 110% find difficulty in the exam. Okay. Thank you.